I mean, really, today, the S&Ps tried, once again, like last week, tried to make new highs and just could not do it, and just spent the rest of the day just wandering aimlessly, and there was just a little bit of sell momentum at the close. I really don't think at this point it had anything to do with the president's speech.
Okay, good. Just on as well then what you saw happening in the session, just the moves that we've been getting. I know you've sort of been saying that US stocks feeling a bit tired at the moment. How are you reading sentiment?
Yeah, you know, right now, keep this in mind, like we have not had a significant move since July 3rd, right before our holiday here in the U.S., and we've just been bumping along. It reminds me a lot of like March and April, where the stock market was just frustratingly flat and just took another data point to get the market moving again. So we have a lot of those coming. Tomorrow we have GDP, and we have the end of the Fed meeting, and Friday we have our labor statistic report. So maybe that will be a catalyst to drive the market.
We saw a move higher in the greenback too, and some analysts seem to be putting that down to expectations that the data is going to be better than expected, and perhaps there may even be a more hawkish tone from the Fed. Is that really what you're thinking we'll see?
Yeah. You know, I do think that, but I think all the viewers know that I have been bullish on the dollar all year, especially against the euro, and it's really cost me. It's really hurt. I mean, I still believe we're going to see 130 at the end of the year, and boy, it's been really hard to hold on to that short. But yes, I do believe that is what's driving the strength in the U.S. dollar presently.
Just on the earnings season as well, because we had a little bit of disappointment there for UPS, seen as quite a bellwether. But then on the other hand, Twitter after the bell up about 18% after it beat on earnings and revenue. Just in that tech space, what have you been seeing there? What's the sort of big trend or theme you've been seeing from the tech companies?
Yeah, it's interesting. Like right now, it seems like with the tech space, it's almost become like a safe haven relative to the market. I mean, I'm talking about Intel, Google, Facebook, the bigger stocks. The semis actually have underperformed, not terribly, but keep in mind, they were owned in a big way in 2013. It's a very crowded space, so I think people are just looking to rebalance. I don't think it was terrible, but the tech space in general has been a safe haven. Semis have just kind of undermined that just a little bit.
Just on the banks as well, I wanted to get your view as well on the sort of themes you've been seeing from the bank earnings.
Yeah, and banks are all over the map. When it takes to the regional banks, we have seen significant loan growth that's driven earnings quite well. To offset that, net interest margins have been down, so almost canceling that out. The big banks have all done pretty well, especially when we had a kickoff of Wells Fargo. But unlike the semis, I think the big money centers are very under-owned by the market, and I think that's what keeps them underperforming.
So overall, in terms of asset allocation, what are you doing right now?
Well, right now, I'm as diversified as possible, because I do think we're in a slow growth mode. I mean, look at China's data. I mean, it's getting better. It's been a bright spot. Europe is stabilizing after a month of stagnation. And by and large, U.S. growth has been good. So I still like overweight in Japanese and U.S. equities solely due to earnings. I like being long in the U.S. dollar against the euro. I'm short gold. And right now, I'm looking to bottom dip in copper.